It's Friday, March 12th, and welcome to Tech Thoughts. This week we will talk a bit about some interesting tech themes and also the listing of Roblox that was successful this week and the possible listing of Coinbase and adding some SPACs to that. This week, the tech index was finally up 4%. Inge, has the market turned?
I will start to apologize for the background sound as I'm at the airport. Very few people here, but I'm at the airport, so you can hear it in the background. If we start with why we're doing this program, just to give you an update on that, is that the fact that we are long-term thematic in our thinking, but this program is about helping you guys to also understand the noise in the market, the data points coming in, which we take into our long-term thinking. But it doesn't mean that we trade on the noise. It's more the fact that we take in the data points and we carry it forward in our long-term models. With that said, the market is correlating 100% with the long-term interest rates for the moment. We saw the recovery in the market this week due to the two factors, really. Firstly, the sales of the government bonds, long-term government bonds in the US went really, really well. Relative to what was expected. Primary demand was strong, rumor about a lot of Japanese buyers. Secondly, ECB stepped up to the plate yesterday and really doubled the buying of long-term bonds, and that's why you saw a tech rally. Interest rates are trading up this morning, and the Nasdaq indicates 1.5% down. So conclusion, the correlation between interest rates and the tech side of the market is 100% for the moment. That's really the market short term. Long term, and this is much more important, is that the fact, what are the underlying growth of tech? And that question will come to an answer really now when we start to see year-over-year comparison with COVID lockdowns and so on. Yes, the market is growing. We are optimistic and so on. But the question is, how much growth is it? What is the underlying growth? And the next 12 months will tell, really, because the comparisons get tougher.
Sitting in a rainy Stockholm, it sounds pretty nice to hear that Spanish airport sound in the background, Inge. Let's talk a bit about Roblox. So the listing, the direct listing this week was kind of a success. The valuation has gone from $6 a year ago to $76 this week. That's 13x. So a pretty high valuation right now.
I would think it's very, very aggressive. And the interesting thing is that before last week, when we talked on Tech Thought, we were talking about hours used or hours spent in the game, 2.6 hours. And we thought it was a little bit too high. It would come down and that would pressure the top line in the short run before they get more users and so on. And as you saw in the guidance of Roblox, that's the same view the company has. So the guidance for this year is just for 1 to 6% booking growth. So it's quite low. It's probably almost the lowest in the industry of all the gaming companies. So you had hyper growth last year and very low growth this year. So it's hard to say what the underlying growth of the model is, and also the risk of the model, given the fact you have external developers on the platform and how interested they will be to develop in the Roblox platform. But it's an interesting company and it's a really brilliant idea.
So this week it wasn't just the Roblox, it was also 8 SPACs just on that single day that Roblox went public. So it's a crazy number of, and we will look at a graph a bit later on, but it's a lot of SPACs going public. And each one of those on that Wednesday raised around $300-400 million. So it's a lot of money raised there as well. Should we move on to the themes that we are currently looking at? I will just change my background here so you can see them. So these are the main ones for the bit larger themes within tech that we're looking at. We have the tech enablers, mainly semiconductors. We have digital platforms. We have digital entertainment, which for us is mainly esports and gaming. And we have the cloud companies. Inge, why are we investing specifically in this 4 key themes?
I would almost start off to explain also these are the things we had before COVID broke out, and these are the things we have now. So we're very, very long term in our thinking, and these were winners before COVID, and they were a lot of them, most of them winners during COVID. So if we look at these type of themes, we all think that those themes will be where we're heading long term. So the next 3 to 5 years, we'll find the winners in these themes. They are winners in the enterprise, they are winners in the consumer spending, and the complexity of producing the things are just increasing. And that's also why we like tech enablers, because of the complexity increase in the marketplace.
Interesting. Any specific companies you want to highlight here? We have some logos. It's not just the listed companies, but also the services within them. So, for example, Google has Stadia up there on digital entertainment, and we also have Google Cloud down in cloud. So a lot of our companies are actually maybe in all 4 of these areas.
Absolutely, and it's also about finding the winners in these areas. So let's talk about cloud and Oracle numbers that came out yesterday. And the cloud business only grew 5% year over year, and the stock price was down 7%. And this is clearly one of the shares we have avoided due to the fact that we think Oracle is going to continue to struggle, as the services around their cloud offering is quite limited, while you have the rest of the pack adding new services. I wouldn't say on a daily basis, but not far from. And thereby they can offer a completely different spectrum of services together with the cloud than Oracle can do.
Wow. The market is kind of blaming AWS to lose market share, since Azure is growing at maybe 50% while they are growing at 20-30%. So that low growth is really showing that Oracle is losing market share even in cloud.
And it's also the lower big numbers. If you're as big as AWS are, it's very hard to grow as fast as Azure. So it's low of the big numbers, to be honest.
That's true. Do we have anything to look for next week?
I think it's quite limited. A few more conferences, then a number of IPOs, which ones you can highlight, Coinbase. Otherwise, we're going into the quiet period ahead of numbers and so on. So it's quite quiet.
Exactly. And before going to Coinbase, I would just like to show you this graph. It's the number of SPAC IPOs in the US. And last year was almost 250. And the first 2 months, so January, February, we're almost at 200. So given the pace in March, with some days with up to 10 IPOs, I think just in Q1 of 2021, we will kind of have more IPOs than all last year. So it's really a boom on the IPOs of SPACs. What do you think about this phenomenon, Inge?
I think it's, as an analyst side of our fund management, so to say, meaning really looking into the numbers, digging into them, trying to understand the companies, SPACs makes it more complicated because the information they send out is quite limited in many cases. So it becomes more complicated to really evaluate the SPACs or the entity in itself and understand what's the real value of it and so on. So it makes life more complicated for us, which means higher risk and thereby more likely for us not to participate.
And we also have a direct listing that we mentioned before, Coinbase. It's not decided which day, but it's probably in mid to end March. What is interesting with this company is again the valuation. So it's rumored to be around $100 billion. So if we see a pop the first day, they can even take over the market cap of Goldman Sachs, which is 123 billion roughly. This company offers a wallet, but also a lot of other services around crypto, and they hold a lot of assets. So it's around 10% of all crypto assets are held by Coinbase. And there also are third parties. A lot of other apps use Coinbase services. So of course, if you believe in the crypto economy, it could be an interesting company, but the valuation is really frothy in my eyes. What do you think, Inge?
I totally agree. It's quite aggressive, to state it mildly. And second big IPO in terms of our space is AppLovin. AppLovin is really the backbone of mobile gaming, and they're also coming to the market next week. And we'll see how that trades. It's an industry which is going through a very big change for the moment, given what happens with Apple's IDFA and the cookie change at Google. So the timing of the IPO is probably perfect due to the fact that we're probably going through a small storm during this year.
Yeah, that's a really interesting field as well. You also had a really interesting take, I think, on Coinbase, that the market cap, if it reaches Goldman Sachs, is almost 5 times Nasdaq, the stock exchange Nasdaq that is listed. And what is interesting is that Coinbase is often taking 1.5% in commission for trading crypto. But looking at how you price trading stocks and other financial instruments, it's far from that. And that's why marketplaces are not that highly valued.
I think when it comes to Nasdaq, for example, I think I'm not 100% sure. I'm not an analyst on Nasdaq, but I think they probably make more money in supplying the prices of the stock exchange than anything else, because that's what's costly really for you is to buy the real-time pricing.
The value of information and data. Yeah. I think we should end it there. Information is maybe the most valuable commodity, as many people say. Thank you, Inge, and have a safe flight.
Thank you, Johan. Thank you very much.